What to do and when. What to do and when is what I'm titling this show today. Well, you're probably thinking, what are you talking about? Well, I'm talking about investing. I'm talking about what should you do with your investing and when should you do it? Well, first of all, I believe when you should do what you should do, whatever that is sooner than later typically is better, which is about the opposite of what everybody hears, which is the programming of stay put, you'll be okay, hang in there, everything's all right, you'll be okay. I want to say most of you, I believe, would agree that is what you have heard your entire investing life. And I am certain that those are the words of non-retirement investment specialists. In other words, they are non-specialist people who call themselves advisors who say that retirement investing is the same as all the time, and you should keep doing the same thing you did while you were saving money, which is just stay put, hang in there, you'll be okay, don't worry. I will say to you emphatically, boldly, that's a bunch of nonsense, and whoever says it to a retiree in their 60s, 70s, 80s, or 90s is absolutely not a retirement specialist. Because when you are in retirement, it's a different phase of life. So when I go back to the title today and I say what to do and when, it's what do you need to do investment-wise in retirement that's different than what you do when you are saving money, and when should you do it. Generally speaking in life, it's do it now, just do it. Do it in a timely fashion. Yes, be smart, be wise, but don't procrastinate and don't give yourself the excuse that you may have heard directly, indirectly, perhaps many times, stay put. Because generally speaking, staying put and not making the shift from where you've been investing your whole life could get you in serious trouble. You are listening to, or if you're watching on the podcast also, you are here paying attention and listening in to the Retirement Income Source. I'm your host, Drew Pelton. Thanks for being with me this morning. With respect to investing, what do you do when and right? And I'm going to shift back into what is primarily this show and what the focus of the show is, which is about investing for income. What you need to do is not wait for the election, not say the markets are going up, not say, well, the Magnificent Seven stocks are doing so well, so I don't need to do anything. What you need to do is make the right allocation in your portfolio that is about long-term retirement investing success. And what is that? It's income, income, income. It's all about income investing, and it's all about making the right decisions. All right, I'm going to take a quick break. Before I do, I'm giving away Dave Scranton's new book, The Retirement Income Source, the name of our radio show, The Retirement Income Source. Dave's book, The Retirement Income Source, will help you understand the power of investing for income. Call us on 225-831-1394. We'll get that right out to you. All right, stay tuned. I'll be right back. You don't want to miss what I'm talking about today, what to do and when. And I probably should have said what to do and when and why. All right. I'll be right back. Stay tuned. Welcome back. You're listening to the Retirement Income Source. I'm your host, Drew Pelton. Thanks for being with me this morning. I am talking about what to do and when. I'll call it in parenthesis, and why. So what is that about? It's about investing for retirement success. Well, what is that, Drew? Retirement success and investing for retirement success has to do with, I think, the very simple thing of making sure you don't run out of money, because the biggest fear people have is the fear of running out of money, the fear of not having enough money. Well, if you keep listening to this show, you're going to hear the answer to how you don't have to run out of money and how you can have perhaps more than you need, but at least having more than you would have had you not done what you were needing to do in retirement investing, and when you needed to do it, which is sooner than later, invest for income. So yes, you're listening to the Retirement Income Source. I'm your host, Drew Pelton, and I'm giving away the book to support all I'm talking about with respect to income. I'm giving away the book, The Retirement Income Source. That's the name of the book. It's by David Scranton. He's my partner. He is our good CEO of our organization that has 100 offices around the country. We are dedicated to helping retirees have peace of mind in retirement, where they have comfort and confidence in their investments, where they don't have to be in a sinking ship. Right now, one of the biggest problems that I see is that people are doing one of two things, maybe both. One is they think they need to be frozen until after the election. So I would say that is not a good win. I mean, we're close. We only have a few more weeks. Call it, by the time of this airing, it's approximately 3 weeks or so until the election. And okay, you could say, well, yeah, I'll just wait. Well, listen, this is what I would say. Do you know what's going to happen when and next? During Donald Trump's first years in office, there were a number of times when the stock market went down 10% in a month. Now, it went back up, but my point is, do you know what's going to happen? What if Kamala Harris is elected the president? Is that going to be good, bad? I mean, there's a lot of arguments both ways. We don't know what's going to happen, and you want to be prepared. When is usually sooner than later. I would not encourage anybody to wait, and I also don't like to suggest that people need to rush. I don't suggest that people need to panic. I don't think that that's wise. But I do think that what is wise and smart is for anyone to be deliberate, to be organized, to be fastidious, and to be focused on making sure that you are investing for success in retirement by investing for income, so that you can assure that you are going to have the best preservation and stability possible, and that you're going to have the best growth possible without having to take on a lot of risk and volatility, and that you have the adequate income. Well, when you invest for income, high yields, you're going to accomplish it all: preservation/stability, less risk, less volatility, within a framework of getting and wanting growth and having the income that you need to live on, and or you have to take because of required minimum distributions. What I'm saying here is all about successful retirement investing. And this book, The Retirement Income Source, which we're giving away today, you can get a copy of this book by calling us on our office line, 225-831-1394 during normal business hours. Now, if you would like to call us in the evenings or call us on the weekends, you can call us on our toll-free number. There's always an associate there, 24/7, 365, and that's 1-833-974-1833. But one of the reasons why I suggest calling us to get the book on during our normal business hours is you may want to have a complimentary review and analysis, and we'd be happy to talk to you about that, as well as you're going to get somebody in my office that'll be a little more attentive. Not that you can't just call and get the book. I'll call it clinically. But The Retirement Income Source, David Scranton, is a great book to help you understand the necessity and the power of investing for income. It says here, the ultimate guide to eternal income. The ultimate guide to eternal income, as in dependable income, reliable income, ongoing income, regardless of up and down markets. It's critically important to understand this. So many people are caught up in this methodology of investing for growth. And they don't understand that when they're in retirement, the shift and the focus of investing needs to be for preservation, growth, and income. It needs to be investing for income. But investing for income isn't just talking the talk. Investing for income has to do with truly getting high yields, high dividends, high interest. That's the part of an investment. It's a part of the investment that you want to utilize. You don't want to invade principal. You don't want to take from the principal. You don't want to sell shares. You want to be able to get income from income. And that's the methodology of taking income that you need to live on from the income from the investments, which again is the yields, the dividends, and the interest. Now, for many of you, you may say, well, Drew, this is repetitive. Well, in a sense, I would say good. Don't forget it. Keep doing it. If you're a client, then it's easy, and you should simply say, thank God Drew is helping me invest for income so I don't have to run out of money, so I can have adequate money in the future for long-term care, so I can beat inflation, outbeat inflation. So your purchasing power is not decreasing, so you can have adequate income to live on. It is truly all about income investing to get the job done in retirement. Be careful of copycats. Be careful of those that talk the talk about income, but they don't walk the walk by way of they don't have the goods. If you are in portfolios that are mostly mutual funds and exchange funds, there's in my opinion, and I'd have to see it, but I've never seen anybody beat what we do. There's a 99% chance. I only say that because I'm saying, well, maybe somebody would come in here, but I've never seen it in 40 plus years. But 99% of people that have mutual funds, exchange traded funds, or even a little smattering, so to speak, or even half your portfolio in individual stocks do not have high yielding, high income. This is not the value of the asset. This is the income. You want appreciation. You want capital gains. And when you get both high income and a respectable growth rate, let's just say you could get over time somewhere between 5 and 7% in appreciation on top of a 5 to 7% opportunity with income, and the opportunity means actually an ongoing income stream, then that's going to be fantastic. I want to talk about an investor client that came into the office this past week, and he's been a client 3-4 years, I'll say, and I find this happens, and I understand, and that's why we're constantly, weekly, I'm hammering home the importance of the message of income. But he said to me, he came in with his wife, and his wife had some further monies that she wanted to roll over into our income-based, income-generating strategy. But the gentleman said to me, he said, now, how does this work? He said, what happens to the yields, to the dividends, and the interest in down markets? Question one. And then two, he says, now, I think you told me, Drew, and whatever I'm about to say, I did tell him. He said, in down markets, how can he said, I think you told me that the interest rate percentage can go up. How does that happen? He didn't understand. Well, I believe his two-pronged or two-pointed question is ideal for virtually everybody to understand. And I find so many people are either clueless about what I'm about to say here, or they are just vague about what I'm about to say. And so this is what you need to know. When you're working with a professional money manager, and many of you know, and I'll say it again, we trade and we operate on the institutional platforms of Charles Schwab and Fidelity. But our fiduciary group, Sound Income Strategies, the RIA, Registered Investment Advisory Firm that manages monies for our portfolio after we set the strategies and we work with the clients, et cetera, that what they're doing is hand-picking through research and analysis and continual research and continual previewing the individual companies' securities that are in the portfolio to make sure that they're good to stay, or maybe we're buying new, or we need to perhaps rid ourselves, or we want to lessen the holdings of particular assets that are designed to do what's good and right for the client. By the way, no cost. We don't do transaction fees. So with that said, there generally speaking happens to be lesser lows that come with this type of lesser risk and volatility. But here's the thing. The hand-picked securities investments do in up and down markets pay a consistent, dependable, reliable income. Dave's book that I was just talking about, The Ultimate Guide to Eternal Income, retirement income source. So you have to understand the source of where you're getting the income, which should be income from income, yields, dividends, and interest. So the ultimate guide to eternal income, as in dependable income, reliable income, ongoing income, renewable income, it comes because professional money managed assets, securities will in up and down markets pay a yield. Why? Because they're going to pay a yield because they're bigger companies. And it's easy with bonds because the bonds have a stated yield. Common stock could certainly have a cut dividend or a reduced dividend. Many of you know that. But preferred stocks have a stated yield like a bond. So there are assets that have predictable, dependable yields that are automatically built in. But when we're doing hand-picked, hand-selected investing and choosing of securities, that reliability of these yields are going to continue. So you can have this reliable, dependable, ultimate, eternal, as Dave was saying in his subtitle of his book, eternal income, renewable income. It's key. And by the way, if you thought about it from a legacy perspective, it could continue the same way if an heir, someone inheriting money from family, continue to do the same thing. There could be this eternal income that comes from the assets if the same methodology was followed. Okay, that's the first key point. Now, before the break, let me just say this so you understand it's really rather simple. It's like, well, how if the markets go down and the value of the assets down, why is the yield, dividends or interest, it's just the income part, it's not the G or the L part, growth or capital gains or capital loss part. It's not the valuation of the particular asset, it's the income. So how is it that in a down market, lesser value of the asset, how is it that the yield's higher? Well, when there's a sharing with stocks, as an example, when there is X amount of earnings that are shared with the investors, well, there's a dollar amount. Well, if the dollar amount's going to be the same shared with the investor, well, if it's the same dollar amount and the value of the asset goes down, well, if you have the same dividend amount at a lower stock, well, it's going to end up being a higher percentage. So hopefully that made sense for those of you that don't love math, which I know is many of you, because I know that by my own studies and surveys. I'm going to come back and talk about that a little bit more to make sure you didn't lose that, because that's a really key thing. Consistent income, high yields, and yields that can even increase, or effectively you're going to get the same income and you're going to make sure you have the same dollar amount no matter what. That's what it's all about. That's what we're talking about here. Income, income, income. All right, stay tuned. You don't want to miss the follow-up here and the follow-on on understanding what to do and when and why. Why? Preservation, growth, and income. All right, I'll be right back. Don't miss it. Hang in there. Welcome back, or thanks for joining in if you're just joining into the show right now. You are listening to the Retirement Income Source radio show and podcast shown on YouTube. Thanks for being with me today. I am talking about what to do and when today with respect to money, your investment dollars, your retirement investment dollars. You are listening to the Retirement Income Source. I'm your host, Drew Pelton. I'm with you on WJBO, if you're listening in on the radio, every Sunday from 11 a.m. until noon Central Standard Time. I'm also on iHeartRadio, and you can catch me on iHeartRadio if you're traveling or out of state or however that is. But you also can watch me on the podcast and find me on the internet, and it is the Retirement Income Source. Obviously, you're going to want to listen to Drew Pelton. And let me say, I have some other colleagues around the country that either have a radio show that's named the same, or it might be a little different, but I'm pretty sure a lot of my guys are doing the same thing I'm doing. In other words, my associates, colleagues, we have about 100 offices around the country. It's growing. We strategically and deliberately open up offices when they're aligned to our methodology and our thinking with respect to the importance and the power of investing for income. Additionally, a lot of the radio show hosts, my colleagues, are also, as myself, a shareholder in our organization, Sound Income Group. So thank you for being with me. And if you are, again, tuning in on the podcast, you want to look up Drew Pelton, the Retirement Income Source, and you'll be able to go back and watch the show. Or on an auditory basis, if you like, you can go to our website. Generally speaking, if you're listening in on a Sunday, 1, 2, 3 days at most after the aired, broadcasted radio show, you'll be able to listen to that if you went online to drewpelton.com, and you just click on the media tab and then click on the radio pull down, and you'll be able to find the topics. Today I'm talking about what to do and when. What this show is about is making good and right decisions for you, the investor. What to do and when in investing typically has to do with, don't get hung up on things like fear of missing out and you stay positioned in risky investments and then something's going to go south. But don't stay stuck because you're in a situation where you're just afraid, or you say you don't know. I don't understand money. I don't understand finances, as an example. I hear this from a lot of people. And people get stuck, and because they're fearful, or they're just generally procrastinators, which generally is procrastinating typically comes out of the lack of knowledge. And a lot of times the whole thing of paralysis of analysis is an intellectual, academic way of procrastinating because you don't really know. Maybe you as a engineer, doctor, lawyer, CPA, as an example, somebody with a technical degree, you may be of a technical academic background where you understand a lot. But when it comes to finances, I have to tell you, I find even the most highly degreed people in whatever their profession is, generally speaking, don't have a full handle on all the moving parts in investing. And I know a lot of you are do-it-yourselfers, and you probably do better than most advisors. It doesn't happen in my house. The key is doing what's good and right for you. When is the best time to do it? Not waiting until markets fall. Not procrastinating because you think markets are up, not procrastinating because you think, well, I'll see who's going to be elected. Okay, fine, but not fine. Do it now. Now, we're just around the corner. But generally speaking, do it now. Just do it. Get a review and analysis of your portfolio. Find out if you're invested for income in the best way for you and your safety and your security in retirement. All right. I've done 3 long segments so far. I'm going to do a short couple-minute wrap-up. I want to thank you for being with me. You're listening to The Retirement Income Source. I'm giving away the book, The Retirement Income Source. Interesting. That's my partner, Dave Scranton, that wrote a good book. It was it's just released this year. The Ultimate Guide to Eternal Income. It's about dependable, reliable income from income-generating assets that can help you have the retirement you need, where you have the peace of mind you need. All right, stay tuned for the wrap-up. You don't want to miss it. And be with me every Sunday if you're listening in on the radio, or listen in on the podcast anytime you can. All right, stay tuned. I'll be right back. And by the way, if you want to get a copy of the book, call us on 225-831-1394. Or if you'd like to get a complimentary review and analysis of your portfolio to see how well you're doing or not with respect to income investing, give us a call on that same number, 225-831-1394. I'll be right back. You don't want to miss it. Okay, here we are for the wrap-up. Last few minutes. What to do and when? Well, 2 things on what? Go vote. Vote right for you. Your vote counts. What else to do financially? Get your portfolio understood. How well are you doing with respect to investing for income? Yes, this is the Retirement Income Source radio show. I'm your host, Drew Pelton. Thanks for being with me every single Sunday if you're listening in on WJBO between 11 a.m. and 12 noon. Or if you're listening to me and watching me on the podcast, great. You can do that anytime. I'm happy to have you. And with respect to your investments, it's never too late. It's always good to have a second opinion. Go get a second opinion. Where do you go? Talk to a fiduciary who does true money management. You're looking at them if you're watching the podcast, or you're listening in only if you're watching or you're listening to the radio. Drew Pelton Investment Services, that's our firm. We're a true fiduciary. We invest monies on the platforms of Fidelity and Charles Schwab. It's all about professional money management and investing for income. Income. It's all about income. Get income from income. Thanks for being with me. Call us on 225-831-1394 if you need help, if you'd like to talk to us further. Thanks for being with me. I'll be back with you in the next show. Thank you. Be blessed.